And if the countries don't pay a toll, then what happens?
They don't get out.
I mean, that sounds like piracy to me, but who am I to judge?
No, that's called property rights. For God's sakes, if you charge advertisers have to pay you. Are you a pirate?
Because it belongs to Panama, but the strait doesn't. Does it belong to Iran?
It does now. It looks to me like they are going to continue controlling the strait. You have a little over $6 trillion in assets. That means you're insolvent.
We're back now with Professor Steve Hanke, professor of applied economics at Johns Hopkins University. Professor Hanke recently wrote an article in Fortune magazine explaining why the U.S. is insolvent. That's a pretty big deal. We're going to find out why and what that means for the economy and the bond markets. We're also going to get an update on inflation, the jobs market, and how the Iran war is progressing and impacting capital markets and the economy alike. Welcome back to the show, Professor Hanke. Good to see you.
Good to see you, David.
I'd like to start. Good to have you back. Thank you for being back. I'd like to start by playing for you this clip. Larry Fink from BlackRock made the following statement on BBC. Take a listen.
To me, everybody has to recognize there's not going to be an outcome that's somewhere in the middle. It's going to either be two extremes. Is Iran a country that can be accepted by the international community? Can Iran be a country that participates in the world again? And if that outcome occurred, then you could have the Iranian oil back into the marketplace, alongside the growth of the Venezuelan oil, and you could paint a picture where oil prices could be lower than they were prior to the Iranian war. If there's a cessation of war, and yet Iran remains a threat to trade, a threat to the Straits of Hormuz, then I would argue that we could have years of, above $100, closer to $150 oil.
What happens to the global economy if that happens? How do we see it?
We'll have global recession.
The US is essentially energy independent. Should other countries, including the UK, maximize their energy resources, including their oil and gas reserves?
Okay, I'll stop it here, Professor. If the Iran war doesn't cease immediately, oil stays high for years, there's going to be a global recession. Do you agree with that?
I think there are a lot of nuances. He's making broad general statements that I think require much more analysis and nuance. The point is that obviously, if the Strait of Hormuz remains closed, or it's functionally closed now. It isn't totally closed, by the way. But it's functionally closed. We'll have higher oil prices. There's no question about it. It doesn't take a genius to figure that out. The one point that he's missing a lot of points, but one point he's missing is that the exports of Iranian oil have actually increased substantially since the war started. And they're selling more oil at much higher prices and with much lower discounts than before. This is what my Iranian friends have been reporting to me. So that's point number one. Now, point number two that isn't reported in the press, because the press just refuses to report all kinds of factual things going on. If they don't like them, there's a lot of self-censorship going on. And one big thing, one of the strongest currencies since the war started is what? The Iranian rial. It's appreciated 6%. The inflation, I'm the only one in the world who measures the Iranian inflation, which of course the press doesn't report this either. But the inflation rate's it's very high. I measured it today at 67% per year, but it's come down from its highs. It's actually, the currency's appreciated since the war started in Iran. The rial is up 6%. Inflation is down from over 80% to 67%. You don't get any of that narrative in the press. And the other narrative that you don't get, the big thing, is that Iran's exporting a lot more oil than they were before the war started. And they're selling it at a lot higher prices and with much, much lower discounts. So
Sorry, how are
So
they
those
how
are
are they doing that? How are they shipping the oil or transporting it?
they put it in tankers. The tankers going out the strait.
Okay. Well,
They they control the strait. The,
yeah,
the,
throughput
the,
from the strait has dropped by like 95%, but basically you're saying that from the Iranian side, nothing's really changed.
well, yeah, no, a lot's changed.
Okay. No, in terms of the volume,
they're
my
exporting a lot more oil, and of course the price of oil is very high
okay.
now. And by the way, the physical shortages in oil are all in Asia. The physical markets are trading at a much higher price than the paper or futures market prices. So oil is going to go up in price because the paper and futures markets will eventually catch the physical markets. The physical markets up here, David, and the paper markets down here,
Right.
and eventually the paper market's going to be mugged by the physical reality, and the price of the futures will go up to match the physical.
The current U.S. fiscal deficit stands at over $1 trillion. And so if the government spends more than it takes in by the order of $1 trillion every single year, what does that mean for the purchasing power and value of your savings? Well, historically, governments don't fix deficits by cutting spending. They print their way out of debt. And when they do, hard assets like gold rise, while dollar-denominated savings lose purchasing power. Gold has been hovering around $5,000 an ounce. JP Morgan is projecting $6,300 this year, and central banks in India, China, and Japan and Eastern Europe are already moving out of U.S. treasuries and into gold at the fastest rate in decades. If your IRA or 401k has no hard asset exposure, that's worth a conversation. My friends and sponsors of today's video, Priority Gold, are Forbes' #1 rated gold provider with thousands of 5-star reviews. 3 simple steps, no paperwork, no pressure, no obligation, and they'll do a free portfolio review so you know exactly where you stand. Call 866-407-6456. That's 866-407-6456, or text David, D-A-V-I-D, to 24999 to get your free precious metals playbook and up to $10,000 in free silver with qualifying purchases. Again, text David, D-A-V-I-D, to 24999 or 866-407-6456. The fact that Iran is still shipping oil, and naturally the volume of their oil that they've shipped has risen, Professor. That's an interesting point. And you told me offline that you think Iran is going to win this war. That's the crux of the conversation today. What do you mean by that, and why are they going to win this war?
Well, they are in control of the Strait of Hormuz, and I think it looks to me like they are going to continue controlling the strait. And in that sense, they have a lot of leverage over the West, and they have Trump completely in a corner because the Western economies are suffering tremendous damage already. The OECD, the headline in today's print edition of the Financial Times, March 27th, 2026, was that inflation would go up to 4.2% in the United States. And as I've been saying on this program over and over again, I said Trump is not going to be able to put the inflation genie back in the bottle, and he certainly is not. I mean, the bond market's just getting killed, by the way. The oil market is up big time again today. As I predicted on this program, once you get the physical shortage occurring in the oil market, and the price in the physical market is way above the price in the paper market, in the futures market, eventually the paper market or the futures market will be mugged by reality. And if the price is up here for physicals and it's down here for the paper market will eventually catch up and move up to where the physical is. Now that means that the price of oil is going up. And again, on March 27, 2026, today, as we're recording, David, the price of oil has surged again. It will remain quite volatile, but it will go up. So I don't know when Fink, you had that recording of Fink, and he said, well, on the one hand, what he really said is, on the one hand, if the U.S. and Israel crush Iran and the strait opens up, the oil prices will eventually go down again. Well, that's not my scenario. They're not going to crush Iran, point number one, and Iran will, with a high probability, continue to control the strait, and that means that functionally it'll be closed. It'll be open only to those people who aren't waging war on Iran. So there'll be less oil coming out of the Gulf, and that the prices will continue to be quite elevated, the oil prices, and the damage to the international economy will continue to escalate and be enormous. Think of the trillions of dollars that are being lost because of this. Not only in the bond market, the stock market has finally started pricing some of this in and is tanking. But also, if you look at any of the forecasts for GDP growth, they're all down. Goldman Sachs just came out with a report saying that the U.S. economy is going to be hit hard. And another thing about Fink's interview, they keep talking about the fact that the U.S. is a net energy exporter. Well, if you include everything, all products, that's true. But if you look at crude oil, they're a net importer. That's another fake narrative. The U.S. imports more crude oil than it exports. So forget that we're a net exporter of crude. We aren't. And forget the fact that we're somehow insulated from world prices in oil. This is another joke coming out of Washington. These guys are spinning everything. The Trump administration, they're just spinners. Nothing you hear is true now.
Going back to the statement about Iran winning the war, Iran is fighting Israel and the U.S. right now. And most of the oil coming out of the Gulf through the Strait of Hormuz, about 80% of that goes to Asia. So Asia and Oceania are the regions most affected right now. The state of the country of Philippines just declared a state of national energy emergency. The New Zealand is now paying up to 150,000 families cash payments every week to help them afford gas. But the point is, Professor, in the West, the U.S. and Canada aren't affected as much because the U.S. produces most of their oil. So,
well, that's true. That's true.
How is Iran winning the war if the U.S. is not affected as much?
The U.S. isn't affected. You must be in another planet. Look at the bond market today.
Okay, that's what we want.
Trump, you don't get it. Trump is in really a corner.
Okay,
he's a loser, and he's in a tremendous corner. Most of the cards are held by Iran. He did say one thing true. He said, we wiped out their Air Force. Well, they didn't have an Air Force to speak of. They had a few planes, old planes, but they got those. They had 6 frigates, I think. So they didn't really have a Navy. And Trump's bragging that we wiped out their Air Force and their Navy. Well, that's true, but they really didn't have a functional Navy or functional Air Force. So that's spin. Now, we are dropping tons of munitions and bombs on Iran, and it's basically a reign of terror, but that doesn't have anything to do with winning a war. Air power never wins wars. Any military person will tell you this. Boots on the ground win wars. Now we're sending up to 10,000 troops into the Middle East. We don't know exactly what they're going to be doing.
That's my question. So is there, I read somewhere, Professor, that these negotiations we've been hearing about all week that Iran has denied existed, by the way, but Trump says that they're going well. But these negotiations, supposedly, if they actually are happening, is just Trump buying time to reposition ground troops, and he's positioning and preparing for an actual boots on the ground invasion. Is that next? Do you think?
Well, this is what it looks like. It looks like, when somebody's completely trapped and desperate, they tend to do, shall we say, very risky things and dangerous things. It's a Hail Mary pass in a football game. I mean, up there in Canada, you even have an American football, and a Hail Mary pass, you know what that is. And
Yes.
and the ground invasion would be a Hail Mary pass. All the military people I've spoken to about this say the chances of that working are almost zero. Almost zero. And the chances, by the way, of the assassination of all these leaders and these various levels of leadership in Iran, that was coming from the Mossad. The Mossad recommended to Netanyahu and Trump that if you just, assassinate a few of the leaders, like the supreme leader, in 2 or 3 days, the whole thing would fall apart. Iran would fall apart. Well, that was the biggest catastrophic strategic mistake of the war. It didn't happen. They're very resilient. They had planned for this, and they're counterattacking. So that's another false narrative. The Mossad's very good and very efficient at assassinations, but strategically they made a big mistake. The new head of the Mossad made this mistake. The prior head of the Mossad, by the way, all this is laid out in the New York Times. The prior head of the Mossad indicated that this regime change kind of thing with chopping the heads off at the top would not work. And he was right. And anyone reading the scholarly literature on regime changes, which I've done extensively, shows that regime changes and covert regime changes almost never work. Almost never. The history it's just one failure after another. So this is another failure. This goes in the failure book. It's failed already. The strategy and the objective of Israel and the United States has failed already, because they thought this was going to be over in a few days. Assassinate the supreme leader and it's over. Didn't happen.
Sanctions don't work. Regime changes don't work. What about an occupation of the country? Has that worked in the past?
You're going to occupy an area that's larger than Europe. We're talking about Iran. We're not talking about some rinky-dink island someplace.
Okay.
90 million people. They've got over 1 million troops that have just been called up. Now we're going to send 10,000 Marines against 1 million Iranian well-trained troops. This is going to be a bloodbath. The Americans, if we put boots on the ground, they're going to be sitting ducks, by the way. But as I say, if people are desperate, they tend to do desperate things, and that's what I think the danger is. I'm not predicting.
Yeah.
I'm just saying people in desperate situations tend to do desperate things.
Okay.
One of my friends, one of my friends, by the way, William Silber, wrote a book about this about 2 years ago. He's a great economist, by the way, but he wrote a book which I don't have at my fingertips right now. It's in my library in the other room, so I can't remember exactly the title. It's William Silber, and he goes through these Hail Mary pass desperate situations where there's almost no chance of winning, but you're desperate.
Wait a minute. Hold on. So these Iranian tankers that are flowing through, why isn't the U.S. Navy stopping them and stopping the Iranian economy from functioning here?
Oh, it's very easy. They don't want the price of oil to skyrocket even more. They want all the oil available every place to be put on the market. Why do you think they lifted the sanctions on the shadow fleet in the Russian shadow fleet? They took the sanctions off so that the Russian oil could be unloaded and put into the market to keep the price of oil down. This gets back to your first comment. If you don't think the price of oil is not hurting the American economy, you must believe in the tooth fairy, David, for God's sakes. This is doing tremendous damage to the United States.
I think what I meant was the U.S. isn't affected as much as the Asian countries that are experiencing actual shortages.
Well,
But yeah,
that's true. In a relative sense, that's true.
Yeah.
You take now Taiwan. Taiwan's someplace I know you know something about. Taiwan's taking a tremendous hit. It's just not oil. Right. Helium is required to produce chips, and it comes from the Gulf. And so they're having to go where? They have to go to Russia to get it. Now that gets to a very interesting point. Russia is, of course, the big winner in this, tremendous winner, because they produce oil and they produce fertilizer and they produce helium. Those are three big things that are bottled up in the Gulf right now, and three things in which the prices are soaring right now. And ironically, there are some good things that come out of this, some unintended consequences. And one of them is, I think, this could be the death nail for sanctions. I think the sanctions regime will start coming off. Fertilizer, for example, nitrogen fertilizer. Putin said until the end of April, Russia is not going to let any fertilizer be exported from Russia. And I'm certain this is a bargaining card. And he's basically saying, oh, we will let the fertilizer out, but you have to take the sanctions off. So getting rid of sanctions is a good thing. Putting sanctions on is a bad thing. And so the war might end up producing all kinds of negative unintended consequences, but it might produce some positive things. And one big positive thing, I think, will be the removal of sanctions.
By the way, Professor, the Iranians have Trump's 15-point plan with their own counter proposal of ending the war. 5 things that they want as part of the negotiations to end the war. One of them I know, and I'll let you talk about the rest. One of them I know is their missile program. The long-range missile program needs to continue without any interference from the West. I'll let you comment on. And wartime reparations have to be made. These are the two that I remember off the top of my head. Can you just comment on what you know? Yes.
Well, there's a third key one, and that is that the Iranians will have the sovereign right to control the Strait of Hormuz. And the U.S. will have to get rid of their military bases in the Middle East that threaten Iran. And there has to be a guarantee that no one will attack Iran going forward. I think those are pretty much it. The reparations, the control of the Strait of Hormuz, the fact that U.S. military bases will have to be removed from the Middle East, and then there are 2 more. But the Iranians have drawn a line in the sand, so to speak, and they have a lot of leverage. And the reason they have leverage, David, is quite simple. They control the strait right now, okay? And they'll probably continue to control the strait. And if they do so, that choke point will cause havoc and huge damage to the Western economies, and the Western economies can't take that pain. This gets back to my point that I think I made in an earlier program, and that is the Iranians have a Muhammad Ali rope-a-dope strategy. And the rope-a-dope strategy, remember Muhammad Ali and Kinshasa, Zaire in the 1970s. It was a heavyweight match. Ali was not favored. The favorite was the champ, George Foreman, Big George. And what the rope-a-dope strategy was, Ali just stayed on the ropes and let heavy punches come in from Foreman. He absorbed the shock, took the damage, and waited until Foreman had exhausted himself, and then Ali landed the knockout blow and won the fight. And that's the strategy of the Iranians. So what are they doing? They're taking all these bombs coming in. They're taking a tremendous blow and damage from the giant, the United States, coupled with Israel, and they're waiting, and in the meantime, they control the strait. And not only they control the strait, there's another choke point down there, and that's the one that the Houthis control. The Houthis haven't moved yet, and maybe that will be part of the knockout blow. When the Houthis shut off the Red Sea entrance, that means that Suez Canal gets shut. So we're talking about shutting the world economy down, big time.
Yeah, well, that's what Larry Fink meant by a global recession. Which,
Right.
by the way, one final point, and I'll move on from this. The Trump administration has made it clear that the people or the countries using the Strait of Hormuz most, Eastern Europe or just Europe in general and Asia, they should be the ones that should be policing the Strait of Hormuz and using their own militaries to escort their ships, which nobody has stepped up to do, or very few countries have, by the way. Most of the NATO, most of the NATO nations have not.
This is a fairy tale. They don't have even the military equipment to do that. The U.S. doesn't. Washington, D.C. is complaining because the U.K. hasn't sent minesweepers down there. And they forget to tell us that we had 6 minesweepers, the U.S., in the area before the war, and we took them out of the area. So they're not even there. I mean, the whole thing has not been thought through properly. There's no question about it. And the reason for that is this major strategic mistake made by the intelligence offered by Mossad. And the intelligence said that the whole thing would collapse in Iran. The regime would be changed in 2 or 3 days if they assassinated the supreme leader.
This came in yesterday, by the way. Apparently, Iran is working out some sort of deal with other countries to let non-hostile vessels through the Strait of Hormuz, basically a toll. If this were to happen, perhaps the U.S., the global economy wouldn't suffer. Yeah, please go ahead.
Maybe not as much, but what this is part of one of the 5 demands, that they have the sovereign control over the strait, and it would be like the Panama Canal or many of these other straits where there's a toll charge. They would charge a toll. And it gets back to your question of why other countries haven't engaged in the war to open up the strait. Well, it's much cheaper to work out a deal with the Iranians and pay a toll. The Indians, paid a toll. There were 2 vessels, 2 tankers went out and went to India, and they each paid $2 million each for a toll. So you let the market work out the thing.
And if the countries don't pay a toll, then what happens?
They don't get out.
I mean, that sounds like piracy to me, but who am I to judge?
No, that's called property rights. For God's sakes, if you own something, you have the right to charge somebody for its use.
Okay.
If you charge advertisers have to pay you. Are you a pirate?
Well, is there definitive legal standing that says the Strait of Hormuz belongs to Iran?
The David Lynn show is owned by The David Lynn show is owned by David Lynn. If you want
But
to
does the entire
participate,
body of water
you know,
belong to the country?
as they say, no
Yeah.
ticky, no washi. You know, you've heard that
Okay.
one before.
Okay, let's move on. Does the entire
And-
body of
any-
water
any-
belong to
any-
them, though?
Any sovereign country, why is there a toll to go through the Panama Canal?
Because it belongs to Panama, but the strait doesn't. Does it belong to Iran?
It does now.
That's what I mean. They just declared by fiat this body of
No,
water belongs to us. Like,
No, this is part of a counterattack. You don't get
Yeah.
the thing right. There was a war of choice, an illegal war waged against Iran, and now they're counterattacking.
I
And what
see.
you're saying is that, oh, why should they have the right to counterattack? We should be able to shoot at them, but they can't shoot back at us.
I mean, the strait is shared by
It's
Oman as
ridiculous.
well. I mean, there's neighboring countries that occupy the same body of water. They can claim whatever they want, but the reality is that the body of water. That's what I mean by piracy. They're just taking it over.
That's why Oman, Saudi Arabia, and so forth told Trump that he shouldn't be doing this.
Yes.
Trump didn't listen to them. This is what happens when you do foolish things like Trump has done, very foolish things, and you don't listen to people. You got a problem. And he listened to the Mossad. He didn't even listen to the CIA and the U.S. intelligence. The deep state told Trump the decapitation assassinations would not work, by the way.
Mm-hmm.
That's another little thing you don't read in the newspaper.
Yes. Well, something else we don't read in the press, apparently, is the media not calling out just how insolvent the U.S. is. This is your article from Fortune magazine, which made quite the stir on social media. Many, many people have quoted you, Professor. The Treasury just declared the U.S. insolvent. Well, they didn't use that word in particular. You highlighted that. However, you did highlight also the financial position of the Treasury. So I'll just read some numbers here in bullet points. The number is $6 trillion in total assets against $47.78 trillion in total liabilities as of September 30th, 2025. And this is supposed to get worse, by the way, if the deficit grows because of this war that we've been talking about. I'll just let you highlight or comment on these highlights, Professor, and what these numbers mean. Anybody with this kind of debt to asset ratio will be considered bankrupt, but the U.S. is not an individual person and entity, so perhaps it's different. I'll let you comment on it.
Okay, before I do that, I co-authored my column in Fortune, my regular column with Dave Walker, who's the former Comptroller General of the United States. And what we're commenting on, we're not making the numbers up. We're just reading the numbers and reporting what's in the consolidated financial statements of the United States government that were just released, by the way. And what you end up with, you have a little over 6 trillion in assets and almost 48 trillion in liabilities. That's on the balance sheet, on the books. That means you're insolvent, okay? Now, it's even worse than that, because to the roughly 48 trillion in liabilities, you have to add a little over 88 trillion because Social Security and Medicare are not included on the balance sheet. They're off balance sheet items. So if you include those, the liabilities are not 48 trillion, but 136 trillion. So it's a complete catastrophe. And the numbers are deteriorating very rapidly, by the way. The quality of the balance sheet is getting worse and worse. And now we've got the war going on. We've got the U.S. government. Trump has asked for 200 to 600 billion more just to fight the war in Iran, which no one wants. And next year, he's asking that the Department of Defense budget goes from a little over 1 trillion to 1.5 trillion. So he's getting the United States in all kinds of financial trouble. right after our article was published in Fortune, by the way, the bond market started to tank. So that's another aspect of the economic policies that are going on in the United States and the war.
Yes.
It's the bond vigilantes are turning on Trump big time.
On these numbers here, the Congressional Budget Office is projecting that the debt held by the public in the U.S. will reach 120% of GDP by 2030. That will surpass post-World War II levels, Professor. Now, at what point does this translate to higher inflation?
It doesn't necessarily translate into higher inflation. If the Fed does not monetize, and if the Fed does not buy the issue of Treasury bonds that are being issued to finance a deficit, it won't affect inflation. Mm-hmm. If they do what happened after COVID, when the deficit became very large, over 90% of the Treasury bond issues that were issued to finance that deficit were actually bought by the Fed. And that created a huge surge in the money supply, which eventually led to a huge surge in inflation. So that's the way it works. It doesn't necessarily mean more inflation, but it can, depending on what the Fed actually does. If the Fed doesn't buy any of the bonds being issued to finance a deficit, the inflation can stay under control.
Professor, this is the chart of the 10-year Treasury yield, and you're right that the bond vigilantes have been reacting to the Iran war. More deficit means higher yield. I wonder if this is part of the reason why gold has been falling ever since the Iran war broke out. As you can see, I've overlaid the 10-year yield with the price of gold, which on this chart is the blue line. And you can see they've moved counter to each other basically in lockstep since the beginning of March. Now, if this deficit situation gets worse, would that mean even higher yields and lower gold then?
Well, this is there are many things that affect the price of gold, but you've pointed out one of them. The higher the interest rate, it means the higher the opportunity cost for holding gold, because gold doesn't yield an interest.
That's right.
If you're holding a bond, you get paid interest. If you're holding gold, you don't get paid an interest. So if bond interest rates go up, it favors bonds relative to gold. But that's only one aspect of the thing. Also, the U.S. dollar has gotten stronger since the war, and that also affects gold.
Okay.
Stronger dollar, weaker gold. So there are many things going on, but you point out one important one.
So do you still maintain your $6,000 gold target, which, by the way, we came very close to knocking out earlier in this year?
Yeah. Yes, I do.
Okay.
I maintain that I think the top of the cycle will be. Remember, I changed that from a point estimate of 6,000 to a range of 6 to 7,000.
Okay.
I do still hold that. It obviously isn't going to happen as fast as it was happening. The thing was skyrocketing.
Yes.
2 or 3 months ago, it was going up very rapidly.
Well, I think that move surprised even you.
It did surprise me.
Yeah, I think that the momentum, the speed at which it moved even surprised you. Okay, well, you're still bullish on gold. Let me just finish up on one final point before we end the conversation. So we talked about the war a lot. We talked about how negative it is for the economy for a variety of different reasons. But can we consider the corollary, which is that perhaps war lifts economies out of recessions and low economic growth, and perhaps the activity of war will generate income for the economies participating in those wars. Take World War II, for example. A lot of historians have argued that World War II reindustrialized the United States and pulled it out of the Great Depression. So maybe comment on that narrative first, and perhaps draw it to today's situation.
Number one, it's a false narrative. It's not true. The
Okay.
U.S. was coming out of the U.S. was coming out of the Great Depression prior to World War II, and so that's point number one. Point number two is related, and that is the historians and people who don't understand economics. Historians usually fall into that category, by the way. But the press picks up, and there's a narrative, and the narrative sticks. And most people believe the narrative without actually looking at the data and understanding what's going on. But there's another aspect. The aspect is the end of World War II. At the start of World War II, the narrative was this has created the boom in the economy, taken us out of the Great Depression. That isn't true. The recovery had started before World War II commenced. Now, let's go to the end of World War II, and you get the same narrative coming in a different way. And that is, most people said when the war stopped, we would have a huge recession.
Mm-hmm.
Because the argument was, well, the war was very stimulative and kept the economy booming and so forth, got us out of the Great Depression. It didn't happen. What happened is we had a boom after the war stopped. So they got it wrong on both sides of the thing. At the start of the war didn't create a boom, and the end of the war didn't create a big recession. Both narratives are wrong. This gets into Hanke's 95% rule. 95% of what you read in the press is either wrong or irrelevant.
Okay. Fair enough.
That's why, David. That's why you've got to listen to Hanke on the David Lynn show.
That's right. And read the Fortune articles that Hanke and his co-author have published.
The Fortune article. It's very straightforward. It's 640 words or something like that. It's not going to strain you. You can read it, and
Yes.
And we spent a lot of time getting it down to where the rubber meets the road, the bottom line, basically. Because if you actually read the consolidated balance sheet and financials of the United States, believe me, that's a document you do not want to read before driving.
Okay. I mean, what? Okay. So we'll put the link down below. By the way, people can read the article in full detail. We don't have time to read through the entirety of the article. So it's a very good read, Professor. I wonder how the U.S. is going to, is going to attack this problem. The Congressional Budget Office. I've had the pleasure of speaking with them. By the way, the director himself. He's been warning Congress of this issue for many years, and it's not the CBO's job to implement policy. They provide some recommendations, but ultimately Congress has to take action. So if you had to suggest to Congress what action they should take, what would that be?
There are two things that should be done. And Walker and I get into this in detail in the end. The first one is that there is proposed legislation before the Congress now that would set up a commission to look into this, and the commission would basically be cleaning up the mess that's already been created. That's one thing that has to be done. Mm-hmm. The second thing is we have to have a constitutional convention and change the U.S. Constitution so this never happens in the future. And by changing the Constitution, we would put an amendment in that would be basically a debt break. And one possibility would be to indicate that government spending couldn't rise any more rapidly than the real growth in the U.S. economy. That's one element of it. The other is that over the business cycle, the fiscal balance in the United States would have to be balanced. You couldn't run these deficits forever. Over the business cycle, you would have to balance. Mm-hmm. And that's very much like the constitutional amendment put in Switzerland in 2001. So there's a two-step thing: a commission to clean the mess up now, which by the way is a huge job of just the unfunded liabilities now, cleaning that up. And then the second stage would be a constitutional amendment that basically put the Congress in a fiscal straitjacket.
Well, hopefully Congress reads your article. Not
Well,
that. Yeah, go ahead.
I can assure you they have.
Hopefully they're taking some action next. Anyway, Professor, well,
it's very in Hanke's book of rules. It's always rule number one is to have a reliable mole in every important institution in the world that affects you. So I have moles in the Congress.
Okay.
They've read it. Let me assure you, they've read it.
Well, hopefully they'll do something with this information after reading it. Yeah.
As they say, David, that's another issue.
Okay, that is another issue. And hopefully, by the way, they sort out the TSA issue, but that we'll talk about that next time. Professor, where can we find your work?
You can follow me on X at Steve_Hanke.
Okay. And we'll put the links down below. Make sure to write to us as well. Let us know what you'd like to hear next time. Professor Hanke is a regular on the program. Thank you again, Professor. We'll see you soon. Bye-bye.
Bye. Thank you.
Thank you for watching. Don't forget to like and subscribe. Follow Professor Hanke. Links down below.